Thank you for tuning in to LeadDeveloper.com, where we simplify complex property development feasibilities, investment analysis, and everything real estate. Whether you're a seasoned pro or just starting out, our Google Sheets-based feasibility suite streamlines the toughest aspects of real estate. Lead Developer Feasibility Suite is trusted by thousands in over 17 countries. Our tools cover everything from quick assessments to detailed cash flow projections and more. Sign up today at LeadDeveloper.com for unlimited free access to our expanding library of real estate tools. No credit card needed. Plus, get full support through Edge with step-by-step guidance, exclusive courses, and resources designed for your success. Turn numbers into narratives that win over investors and lenders. Join Lead Developer now.
All right, so you want to jump into the Australian property market.
It sounds exciting.
But you're trying to figure out, is now the right time?
Yeah, that's the million-dollar question, isn't it?
It is, and you've given us a whole stack of articles and reports.
Looks like someone's been doing their research.
You have been doing your homework, so...
Did I not?
Let's dive in.
Yeah, let's do it.
We've got this one article here called Property Market Cycle, Get In or Get Out.
Catchy title.
Yeah, and hopefully by the end of this deep dive, you'll have a better picture of how this whole cycle works.
Fingers crossed.
What's driving it right now, and what it means for someone like you who wants to get involved.
Yeah, the Australian property market's a bit of a beast.
It is.
Lots of moving parts.
Yeah.
This article, though, I think it does a pretty good job of laying out the key factors.
Okay.
Anyone thinking about developing property needs to wrap their head around.
So let's break it down.
Let's do it.
The article starts off by talking about the property market cycle.
All right, those ups and downs that happen over and over with property values.
Yeah, like waves on the ocean.
Exactly. And if you're trying to develop property, you really want to know, are you riding the wave?
Right.
Or are you about to get wiped out?
Yeah. Ideally, you want to buy low and sell high.
Exactly. That's the dream. But how do we figure out where we are in that cycle right now?
Well, that's the question, is that how do we know?
Yeah.
Well, they point to 7 key economic indicators that can give us a bit of an edge.
Okay, 7. It's a good number to get our teeth into.
All right, so the first one they mention is government policies.
Ah, yes. Those can definitely make some waves in the market.
Yeah, remember all that talk back during the last federal election about changing negative gearing?
Oh, yeah, a lot of investors were getting pretty nervous about that.
They were a little bit.
Yeah, and things like lending restrictions, too, they can have a big impact.
Okay.
Like the article talks about how back in 2015, APRA, the Australian Prudential Regulation Authority, they tightened up the lending rules for investors, and that actually helped slow down that crazy price growth we were seeing.
Interesting. So it can actually make a difference.
Oh, yeah, big time. So you got to keep an eye on what the government's doing and how it might throw a spanner in the works for your plans.
Yeah, constantly changing.
Always.
Okay, the next indicator is unemployment.
All right, well, that one's pretty straightforward.
Yeah, if people don't have jobs.
They're not buying houses, are they?
Makes sense.
It's pretty simple.
Yeah.
Really, a strong job market makes people feel more confident, more secure financially, and they're more likely to make a big investment, like buying property.
So high employment basically fuels demand, and that pushes prices up.
It's a simple connection, but super important to keep in mind.
Yeah. Well, let's move on to interest rates.
All right.
This one seems pretty straightforward, too.
Yeah. Lower rates mean cheaper borrowing, right?
Exactly. When interest rates are low, it's like mortgages are on sale.
Yeah, exactly.
Borrowing money is cheaper, which makes buying a house way more affordable, and that boosts demand, and then, of course, prices go up.
Precisely. But of course, on the flip side, when those rates start to rise, borrowing gets more expensive, demand cools down. And that can put downward pressure on those prices.
So as a developer, keeping an eye on interest rate trends is pretty crucial.
Absolutely. It's like one of the first signs that the market might be heading for a downturn, that the steady increase in interest rates.
Okay, definitely something to watch out for.
Definitely.
Next one is inflation.
Okay.
Now, I always thought low inflation was a good thing, but the article seems to suggest that it doesn't always mean property values will stay flat.
That's right. You got to think about something called real growth.
Real growth?
Yeah, imagine inflation's running at like 2%, but your property value goes up by 5%.
Okay.
Your real growth is actually 3%. The amount that beats inflation.
Ah, so even if inflation is low, you could still be making some decent gains in property values.
Exactly. It's all relative.
Yeah.
A lot of people miss that nuance.
Interesting. Okay, well, on to population growth.
All right, well, this one feels like pretty basic supply and demand.
Right. More people, more homes.
Exactly. Australia's population has been going up steadily, fueled partly by immigration, and that's a big factor driving the property market.
Yeah, for sure. The article even mentions a theory that each new immigrant creates 3 new jobs
Wow.
through the demand that they generate
That's huge.
for goods and services, and of course, housing.
Yeah, that's a lot of new houses needed.
Okay, well, next up is the house price index.
Yeah.
Now, is this like a national average for property values?
It is, but keep in mind, it's a very broad measure. What really matters are the local market conditions. They can be totally different.
Right.
The article says dwelling values in Australian capital cities have gone up by 7.5% in the past year.
Okay.
Which suggests, the overall market's strong, but you really need to zoom in on the specific areas you're interested in.
Right, so national trends are useful, but
Yeah.
as a developer, you got to really do your homework on those local markets.
Oh, absolutely. Local factors can make or break a development project.
Okay, well, the last indicator on this list is the Australian dollar, and I got to admit, this is where I get a little lost.
Yeah, I hear ya. This one can be a bit tricky. How does it impact property prices?
Right.
Well, think of it this way. A strong Aussie dollar can actually be bad news for industries that rely on exports,
Okay.
because it makes their goods more expensive for overseas buyers.
Right, makes sense.
So if those industries start to struggle, it can have a ripple effect through the local economy and ultimately impact property prices in those areas.
So a strong Aussie dollar could actually drag down property prices.
Exactly, in some regions.
Yeah.
But a weaker Aussie dollar, it has the opposite effect.
Okay.
It can make Australian property look like a bargain to foreign investors.
Makes sense because their money goes further.
Exactly.
Yeah.
So it's all about understanding the specific context.
Okay, so the Aussie dollar can either boost or drag down property prices depending on where you are and what industries are dominant in that region.
You got it.
All right, well, we've just gone through those 7 key economic indicators,
We have.
and it's a lot to take in.
It is.
So what does this all mean for someone like me who's thinking about getting into property development in Australia right now?
Well, the article argues that there's no magic perfect time to invest,
Okay.
but they do highlight some interesting things about the current market, how it seems to have peaked recently.
Yeah, that was interesting.
And that's spooking some of those novice developers.
Right, they're starting to sell off projects that already have plans and permits in place.
Exactly. And that creates an opportunity for what's called counter-cyclical investing.
Counter-cyclical investing, is that like buying a winter coat in summer?
Exactly. You're buying when everyone else is selling, and you could potentially get a steal.
I like it, but the article also stresses that even if you find a good deal, you need to be prepared for the market to potentially take a dip.
Absolutely. Having a solid strategy is crucial. And that includes being smart about how much you borrow. Don't get over-leveraged, even if it's tempting.
Right, responsible leveraging.
That's it. And you got to make sure you can find good tenants. People who can keep paying rent even if the economy hits a rough patch.
Yeah, and have some cash tucked away for unexpected expenses.
Always a good idea. Things always pop up.
So it's not just about finding a good deal. It's about being smart, strategic, and prepared for whatever the market throws at you.
Couldn't have said it better myself.
All right, it sounds like the Australian property market is a wild ride.
It can be.
But with careful research, a solid strategy, and maybe a bit of daring, there are opportunities to be found.
There are indeed. It's all about understanding the forces at play and making informed decisions.
Well, this has been a fantastic overview of the Australian property market cycle.
It has.
We've already uncovered some really valuable insights from this article,
We have.
but we're just getting started.
Yeah, just warming up.
You gave us a whole stack of sources to explore, so let's dive into the next one.
Sounds good to me. Let's see what else we can learn. That last article really got me thinking about Chinese investment in the Australian property market.
Yeah?
It's amazing how much influence foreign buyers have,
Yeah.
especially from China.
It's pretty wild. I mean, the article mentioned that even with those tighter foreign investment rules, Chinese buyers are still like a major force in the market.
Exactly. They see Australia as a safe and stable place to invest,
Yeah, makes sense.
especially given, the current global climate.
Yeah, and with the Chinese yuan weakening against the US dollar, Australia is looking even more attractive compared to places like the US or the UK.
That's a great point. So even though the government's trying to, cool things down a bit, those regulations might not be as effective as they'd hoped, especially in the long run.
Yeah, it makes you wonder how much impact those regulations really have. Maybe some of these other sources will shed more light on that.
Maybe.
But before we move on, I wanted to just circle back to something you said earlier about supply and demand. You mentioned It's crucial for developers to understand these dynamics.
Absolutely. Remember, it's not just about national trends. You need to zoom in on those specific local markets and really understand what's happening on the ground.
Right, like are there a ton of new developments popping up in a particular area? Is there a shortage of certain types of housing? Those are the kinds of questions a developer needs to be asking.
Exactly. Those local dynamics will really heavily influence your decisions as a developer. You don't want to build a bunch of luxury apartments in an area where there's no demand for them, for example.
Makes total sense.
Um,
Okay, I'm ready for the next source. What have you got?
This next one is from a blog post that kind of digs into the impact of broader economic factors on property market cycles.
Oh, okay. Sounds right up our alley.
Yeah, the author really emphasizes the link between the economy and the property market.
Right.
They argue that a strong economy generally lifts all boats, including property values.
Yeah, makes sense when people feel good about their jobs in the future, they're more likely to invest in a big purchase like a house.
Exactly. And the author points out that Australia's got a pretty impressive track record. They've had over 2 decades of uninterrupted annual growth, no recessions in over 20 years.
Wow, that's pretty remarkable. But didn't we just hear that the market might be peaking?
Yeah.
How does that square with a strong economy?
Yeah, that's where things get a bit more nuanced. The author then talks about building activity as a key indicator of economic health.
So more construction means a healthier economy, right?
Generally, yes. But the author cites some figures from the Housing Industry Association that suggest things might be slowing down. They say the strong upward trend in building approvals, particularly for multi-unit dwellings, has lost some steam.
So even though the overall economy seems to be humming along, there are some cracks appearing in the building sector.
Exactly. And the author suggests that this could be an early warning sign of a shift in the property market cycle.
Oh.
They even use the word correction, like a reality check is coming for the market.
Okay, so we've got a bit of a mixed bag here. Strong economy overall, but some potential warning signs in the building sector. What else does the source highlight?
Well, they go on to discuss the role of interest rates, which we've already talked about.
Right, lower rates tend to boost the market, while higher rates can act as a brake.
Exactly. But what's interesting here is that the author points out that Australia is currently experiencing record low interest rates.
Yeah, I've been hearing that a lot in the news, but wouldn't that be pushing property prices up even further?
It would, but there's another force at play here. APRA's tighter lending guidelines for investors. Remember, they're trying to keep the market from getting too overheated and prevent a bubble.
Right, so it's like they're trying to walk a tightrope, keep the economy moving, but not let things get out of control.
Exactly. You've got these two opposing forces, record low interest rates encouraging people to borrow, and stricter lending guidelines making it harder to qualify for a loan. It creates a real push and pull in the market.
Okay, so it's definitely not as simple as just looking at interest rates on their own. You have to consider the whole lending landscape.
Absolutely. And then the author brings up another key factor, the employment rate.
Right, we talked about that earlier. High employment, generally good news for the property market.
And in Australia, the employment rate has been relatively stable, even dipping a bit lower in the past year. The prediction is it will continue to decline as we move into 2016.
So another positive sign for the market.
It would seem so. But even with all these positive factors, a strong economy, record low interest rates, and a healthy employment rate, the author still throws in a word of caution.
I was just thinking the same thing. There's always a but coming, isn't there?
There is. They suggest that even though things look good on the surface, the market might be nearing a peak, and now could actually be a smart time to get into property development.
Wait, really? That seems kind of counterintuitive. Wouldn't you want to buy when the market is low?
You would, but the author presents an interesting case for what they call counter-cyclical investing. Remember that winter coat analogy?
Yeah, buy low, sell high.
Right, but sometimes buying low means going against the grain. The author argues that because the market has peaked, a lot of novice developers are getting nervous and selling off projects that already have plans and permits in place.
Ah, so you're swooping in and snatching up these projects at a discount because everyone else is panicking. Pretty clever.
It can be a smart move, but it's not without its risks. You have to do your due diligence and make sure the numbers make sense.
Yeah, that's always good advice. No matter what the market is doing, don't just jump into anything without doing your homework first.
Absolutely. The author also emphasizes the importance of being prepared to weather a potential downturn, even if you're buying at a discount. They talk about responsible leveraging, securing high-quality tenants, and having a cash reserve. All solid advice, in my opinion.
It definitely sounds like there's a lot to consider. It's not just about finding a good deal. You have to be strategic and prepared for anything.
Exactly. And that's why understanding the property market cycle is so crucial. It helps you make informed decisions and navigate those inevitable ups and downs.
Well, I'm definitely starting to see the bigger picture here. Thanks for breaking all of this down for me. Ready to tackle the next source.
Bring it on. I'm curious to see what other perspectives we can find.
Okay, so we've covered a ton of ground already. Government policies, interest rates, employment, even the Aussie dollar.
It's a lot.
But I feel like we're missing one crucial piece of the puzzle. How does all this actually play out when you're developing property?
Oh, you're right. We've been looking at the big picture stuff. The macro environment, those big economic forces that shape the market.
Right.
But the micro level is just as important. Understanding the specific challenges and opportunities that developers face.
Yeah, like what do you actually do?
Exactly. Luckily, this next source dives right into that.
Okay, perfect. Let's hear it.
So this piece argues that for developers, timing is everything at, knowing when to buy land, when to start building, and when to sell those finished properties can make or break a project.
Makes sense.
It's all about aligning yourself with the market cycle, riding those waves we talked about earlier.
Right. So if a developer jumps in at the peak of the market when prices are sky high, they could be setting themselves up for a wipeout.
Exactly. They might end up buying a property at an inflated price only to see the market cool down while they're busy building.
Ouch.
And suddenly that project isn't as profitable as they thought it would be.
No, that's got to hurt. But on the flip side, if you can anticipate those market shifts, you could potentially snag some incredible deals.
Absolutely. That's why this article really stresses the importance of being one step ahead. Smart developers are always analyzing market trends, looking for those subtle signals that a shift is coming.
Okay, so what kinds of signals should a developer be looking for? What are those clues that the market's about to turn?
Well, the article mentions a few key things. One early sign of a potential upswing is a decline in vacancy rates.
Vacancy rates.
Yeah, for both residential and commercial properties.
So if fewer properties are sitting empty, that means demand is increasing.
Right, and that could push prices up.
Got it. And what else?
Another thing to watch for is rising rental returns.
Rental returns?
Yeah, if landlords are able to charge higher rents, it suggests that demand is outstripping supply.
Okay.
Which is a good sign for developers.
Makes sense. The article also talks about building permit approvals.
Yes, an increase in building permit approvals can signal that developers are sensing opportunity, and getting ready to build. It's like they're voting with their wallets, putting their money where their predictions are.
They're seeing those early signs of an upswing, and they're jumping in.
Exactly. And then, of course, there are those broader economic indicators we talked about earlier, like a decrease in unemployment companies, expanding investors feeling optimistic.
Right. Signs of a healthy and growing economy.
Exactly, which tends to translate into a strong property market.
Okay. But what about the flip side? What are the warning signs of a declining market? What should make a developer hit the brakes?
Well, we've already talked about rising interest rates.
Right.
But another early indicator can be a slowdown in inquiries for rental properties.
Interesting. So if property managers aren't getting as many calls from potential tenants?
Yeah, that could be a red flag.
Okay.
And then there's bigger economic signals like rising unemployment,
Mm-hmm.
Businesses struggling to pay their bills. Those are signs that the overall economy might be weakening,
Right.
which could definitely spill over into the property market.
Right. So a savvy developer needs to keep a close eye on both the property market and the broader economy.
Absolutely. It's all interconnected. But this article makes another important point. Recognizing these signals is only half the battle.
Right.
You also need to know how to react to them.
So what's the best move if you see the market starting to decline? Do you just hunker down and wait it out?
Well, the article suggests the developer should proceed with caution. Maybe even hit the pause button on new projects.
Right.
They don't want to get stuck with a bunch of unsold properties or vacant units when the market is soft.
Right. Better to wait for the right wave than get caught in a storm.
Exactly. And on the flip side, if you see those signs of an upswing, that's when you want to be ready to capitalize on the opportunity.
So it's all about timing strategy and being able to adapt to the ever-changing market.
Couldn't have said it better myself. And that's what makes property development both challenging and rewarding. It's a bit like surfing.
Oh, I like that.
You need to understand the waves, know when to paddle out, and be prepared to wipe out occasionally.
Uh-huh. Yeah.
It's all about timing and skill.
Well, I have to say, this deep dive has been incredibly insightful.
It has.
We've covered so much ground, from those big economic forces to the nitty-gritty of development timing. I feel like I have a much better grasp of the Australian property market cycle now.
Me too. It's amazing what you can uncover when you really take the time to dig into the details.
And I think that's the key takeaway for anyone listening today, whether you're a seasoned developer or just starting out knowledge, is power in this market.
Absolutely.
Stay informed, be strategic, and don't be afraid to adapt your approach as the market shifts. Think like a surfer. Ride those waves. Don't let them crash over you.
And never stop learning. The property market is constantly evolving, so stay curious and keep exploring new ideas.
Great advice. Well, on that note, we're going to wrap up this deep dive. Thanks for joining us, and we'll catch you next time for another fascinating exploration of the world around us.